Oh man, oh man, oh man, oh man. What the H-E double fracking hockey sticks is going on here? We got like literally a 10%, more like 9% swing on NVIDIA in the last like 22 hours or less. You know, because this morning I feel like it was up 6% at one point. You're talking like a 12-hour, 9% swing on, you know, a multi-trillion-dollar company, now only worth $4.4 trillion. This is some crazy stuff here. Holy molies. A little bit of a blow up here. Some people definitely wondering if this is a Japanese carry trade issue again. We're going to talk about that. But look at this. CoreWeave, forget the 79 line. Bro, we couldn't even hold that. It's going straight into the freaking dirt. 595 on the Qs. Yeah, right. We's going right to 577. Palantir's down another 6.5%. Robinhood's down 10%. Like, stop the count. Netflix is down 4%. Like, this is like indiscriminate selling across everything. People are fleeing to safety in Walmart. They're going to Walmart. Oh, because the rich people are getting so poor in the stock market that they're going to go shop at Walmart now, I guess. Symbotic gives up all of its gains for the days. Tesla was rallying like crazy, now down 1.6. Bitcoin, I think we just hit a new low, a new recent low here. 86,000. I mean, we fell down over here, on the 18th, just a few days ago, to 89. And everybody said, oh my gosh, your last chance to buy Bitcoin under 90. You know, then they had to pump it back up again, make it expensive again, but that didn't last because, you know, then we fell back to 88. Then we pumped back up to 93 and that didn't last either. Now we're at 86 again. 86 is the dump. Who's dumping? Maybe it's the Japanese. Somebody here says, I'm a bankruptcy attorney with a buttload of NVIDIA shorts. I'm popping a bottle night. Yo, Joe Papas, I want to come over. Let's pop a bottle together. This is abuse. We need therapy after a day like today. Like, what the hell is this? This is, it's like, hey, guys. I mean, what did we say in the Alpha report this morning? Hey, as long as we can hold, 198 to 200 in NVIDIA, 232 on AMD, we're good. If we don't, we're going down to 595. We're probably going to crash right through 607. We didn't get anywhere close to holding on NVIDIA. We held for like an hour. The first hour we're good. But couldn't cross the line. Same on AMD. And it just tanks. Absolute tank. We didn't even stop at 595. Well, in fairness, we did pit stop. We pit stopped at 595. And we came back to 599 only to dump. Somebody here says, fat dump. You're right. Bankrupt. Bro. I think, they're not, I don't think they own all of the, wow, down 20%. I mean, we looked at the numbers on FAT yesterday, and I'm like, I've never seen a balance sheet this bad. I don't know how many stores they actually own because they're a franchisor. I don't know that much about them. I just know when I looked at the FAT numbers, they were not fat. They were very bad. I was like, I feel like I had a nightmare about the FAT balance sheet yesterday. Because it was so bad. Current portion of long-term debt, $1.2 billion. $1.2 billion of current portion of long-term debt, which is basically all of it. So it's been basically called due. And they have cash of $2 million. Like, you can't make this stuff up. You can't make it up. It's so bad. It's pretty bad. That's wild. But anyway, let's see if we can stabilize here at all going into the close. These are a lot of lines that have just been destroyed. And what we really ought to do is see what's going on with the Japanese carry trade. Because, initially I'm like, I don't know. The Japanese aren't intending to raise rates again. What happened the last time is we spiked the carry trade disaster by suddenly raising rates 0.25%. I'm like, they're not expecting to, raise rates right now. But what's happening is the market yield is going up. The Japanese 30-year bond is going down. And so the market's doing it for you. So let's pull it up. See this? This is the Japanese 30-year bond. And so the market is driving yields up for you. You don't need their central bank to increase, the rates here. Yeah, Mitangu, why don't you go watch my Michael Burry video? If you actually pay close attention to Michael Burry, it's actually, you don't even have to pay attention to the closely. You just have to watch my Michael Burry video. In my Michael Burry video, I say, Michael Burry will eventually be right. The question is when. And so if you actually watch my content, you shouldn't be confused. It just makes you look dumb. Sorry, Mitt. Somebody says, holy smokes, it's Max. What's up, Max? Look at Fiserv. What happens if they discontinue Clover? Why would they discontinue Clover? Clover should be a moneymaker for them. I don't think there's any reason for them to discontinue Clover. Clover, POS. Yeah, I don't see a reason why they would do that. But anyway, let's look at Fiserv. Unless you're suggesting that, Fiserv's going to go like BK or something like that. Well, what's going on with Fiserv? So Fiserv, they've been tanking. Wow, dude, yeah. In fairness, they have been tanking. So I think what you're saying is there's like almost a risk. Somebody here says QQQ 607 puts. 607 was a good line. We had that in the alpha that, if we lose 607, we're going down to 595. And we went down way more than 595, but we definitely tanked after losing 607. This is a soft support level there. So I didn't say last night that Burry was wrong. I've never said that Burry was wrong. Go watch my content. I said that Jensen said that our old chips are still operating at 100% utilization. Get the head out of your ass. I said at some point that will flip and we will have a glut of chips and they'll have to catch up on their depreciation schedules. But that's not what they have to do now. Today has nothing to do with depreciation schedules changing. So it's not like just because there's a red day, it's not like Burry's depreciation argument is right today. In the future, it will be correct. I've been arguing about that for 2 years. I'm like, dude, at some point, these old chips are going to lose value. So get the head out of your ass. And if you're going to try to criticize me in the comments, at least be right about what you're saying. So anyway, where were we? So 585. Well, that's $10 lower. So what else do we have here? CoreWeave. Okay, let's listen to the Bloomberg, what they have to say really quick.
Indigestion that we've seen in the past week or so. How are the institutions that you're working with feeling about those valuations, specifically in fixed income?
Right. So you and I, when we like something, we can get in or out or do nothing. Mm-hmm. Institutions can't do that, right? They have to continually stay invested. So I get asked a lot about the credit markets. Do you think now's the time to invest in credit? Well, if you have to always be invested in credit or in equities, it's more of a relative value play, right? So what looks more attractive when you have to put $1 into these categories or sit in cash?
Mm-hmm. Yeah.
And I think we would recommend not sitting in cash. So it's a relative value play. And on the credit side, high yield might look better on a risk-adjusted basis going forward. We still think the technicals look good for investment grade. However, we're seeing a shift more toward...
Why are you going on here pitching debt right now?
Why I shouldn't just sit in cash, especially as maybe some of the more aggressive cases for the Fed's rate cutting trajectory maybe come off the burner.
Well, at the very moment, cash on its own is not going to get you to your return target. Most institutions in the U.S. specifically are targeting somewhere between a 6 to 7.5% return target, and doing cash alone is just not going to get you there. So you're going to run into funding problems with that. And there are areas of opportunity, right? So despite the headlines, we think we still think that things are looking constructive for equities. We're still risk on there. We're still risk on in certain parts of the credit spectrum as well. So we think there's opportunities no matter where you want to look, even if you think there might be too much concentration in the U.S. market. So one thing that we've been talking about a lot lately, we think there's opportunities for small cap, both in the U.S. and ex-U.S. We think with quantitative strategies, there's opportunity both in emerging markets and as well as in Europe.
Yeah.
And I think Europe kind of surprises people. But we've done some research to show
let's
that the
get away from the United States because it's red and go invest in Europe. I think the Japanese carry trade is very interesting. Also interesting how the person who was trying to troll me in the comments has now officially vanished. I didn't ban him or anything. They just stopped talking. Maybe because they realized what they said was totally wrong. But that's okay. That's very common. I don't mind being wrong, but this depreciation issue is not the issue today. That's not why the market is selling down today. In the long term, it will be an issue. That's not why the market is selling off today. Interesting, you're seeing a little bit of a bid into the close here. We got about 3 minutes to go. I think there are really 3 reasons you're seeing this today. I think if I put this together, I would say number 1 is carry trade. And potentially some margin calls going on because of the 10-year yield on the on the Japanese Treasury, which was somewhat surprising to me because, you know, they talked about not raising rates. You have a VIX explosion. You have, you know, so I'm going to write down the 3 issues today. Why the sell-off? NVIDIA is one part. You know, that doesn't help. Which is the, then you have the carry trade part 2. Then on top of that, you have institutional seasonals, institutional seasonal weakness, CTA selling, plus a VIX spike, right? VIX spike. So let's go ahead here. So I'm gonna write that down so we can reference this in just a moment. Let's go look at the VIX. So VIX up 13% right now. Let's see here. Yeah, but yeah, I'm gonna make a note. Somebody says, "Can you share Kevin's email?" Oh, you guys can always email me.
Email staff@meetKevin.com.
The, you know, so we'll write it down here. Bury depreciation issue. This, you know, we've talked about this. We've talked about this issue for years. It's not why the market is selling off today. I can't type fast enough. The market is selling off today. It's not like all of a sudden people are changing depreciation schedules. That's a long-term issue that comes after the bubble bursts, right? Or sort of like when growth tops off. That comes after growth tops off. Growth tops off some you know, crash basically. Which the crash could happen because of the other reasons, right? The depreciation issue does become a long-term issue. So it's not, you know, just because stocks are red today doesn't make Bury right today about the depreciation issue. But that will come. I have no doubt about that. That will come though. Not yet though. Okay, so let's see how we're ending here. We've got 20 seconds to go. We've got Palantir just under 6%. Fat Brands is down 27%, tanking even more. Q's tanking even more. Still holding on to 585 though. And then I've got Tesla over here at 225, falling even more, 395 right now. Let's get the bell.
Part of the cleansing, even if it's taking down some of the more profitable companies today as well. Warren, thanks so much. Appreciate it. We are going to go out pretty much at the lows. The S&P 500 is down close to 1.6%. NASDAQ off 2.1%, as we do have very negative breath after an extremely strong start to the day. That does it for closing bell. We'll send it into overtime with Morgan and John.
Z-Pack says, dude, Kevin, watch your stream every day. You know me. I've been a major bear for a year now. And blah, blah, blah. I made over $25,000 shorting in the past 2 weeks. Let's go. Congratulations. Yeah, I think it's been good to be prepared and just be aware of it, you know? This is why I say, like, the Burry thing is, like, you should be aware of the depreciation issues. That's not what the issue is today. I'm starting to get more and more convinced that the carry trade may be exactly an exacerbation of what's going on, along with some risks in the AI trade. Look here. So if I go look at zero hedge right here, these are very interesting. Japan is flashing real stress. The yen and long bond JGBs are collapsing together. This is bad because when the yen goes down, you have to pay back even more money in dollars if you're borrowing to invest in America, and then stocks go down, and then the yield goes up. This is like a trifecta of hell. So I want you to think about this for the Japanese carry trade. I'll write this down right here. So trifecta from hell. Okay, so the trifecta from hell. It's so funny. The person that was trolling me has totally disappeared. Yeah, because they totally realized they were wrong. They probably went and, like, looked at my videos and like, oh, I was wrong. Kevin didn't say that. Yeah, all right. Trifecta from hell. Okay, so the trifecta from hell. It's a few things. Number one issue is Japanese yields in markets up. Okay. Number two is Japanese yen down. Kevin, you released a video yesterday titled, do you watch the damn video, you moron? Or do you just read the title? Watch the video. Holy shit. Jesus, if you're coming in here trying to complain about the titles, have you never watched one of my videos? Like, wake up and get the stick out of your ass. Holy crap. Learn what context is. Watch the whole video. You come back after going dark for 10 minutes because you probably looked at my transcripts and realized that the actual content of the video is as I've described, and you come back and go, but Kevin, the title. No shit. Wake up. Oh my God. Classic. That's the worst you got. Oh my God, Kevin's title. It's hilarious. All right, so the trifecta from hell. Japanese yields in markets up. Japanese yen down. And then you have the other issue, US stocks dump, right? It is the trifecta of hell. So trifecta from hell because each of them increase the risk of Japanese margin calls, right? Each of them, which is actually really interesting. So the Burry issue, you have to realize this is a long-term issue. This is only an issue when utilization is questioned and then and supply catches up. Then residual values tank, right? That's what happens in the long term. But that is not happening today. Like, today, none of those things are changing. That's very interesting. Okay, and then look at this. BTC knows what's cooking in Japan. Now, this is interesting because look at this. This chart, they say, this is BTC inverted. So basically when the line is going up, Bitcoin is going down, right? The Japanese 30-year and Bitcoin inverted, moving in tandem. That's pretty impressive. That's very impressive. Right. So the point of this here is this has not happened yet, right? So this is critical. This Bury trade has not happened yet. Stocks going down today aren't even going down on the Bury trade yet. That's actually scary because it means the Bury trade is still ahead of us. He's too early for pain. He's too early right now in terms of the depreciation trade, right? So the Bury depreciation trade. Depreciation trade. So I'm going to call it depreciation trade. The BDT. The BDT is too early. People are still BTDing, buying the dip, because the BDT is too early. But we have problems because of Japan, volatility, and I personally think liquidity. I think that's another issue, right? So what we have is NVIDIA is part one of the issue. You have the Japanese carry trade. That's issue number 2. You have the institutional and seasonal weakness. That's number 3. You have the VIX spike. That's number 4. Then you have the liquidity issues, liquidity issues. Fed is still doing QT right now until D-Swan. And the Bury trade is your future problem. The Bury depreciation trade, the BDT. That's what I'm calling it. No, JPI would need to go up and appreciate to be for trifecta from, yeah, hell. I don't, you might be right. Let me see here. Japanese yen is losing value. But I guess relatively so it's not a trifecta yet then, if that's true. Oh, Intuit just reported. Intuit beated. Beated. Oh my gosh. Intuit beat. No, well, that's good. Let me look at that. Because you could be right about that. Let me see here. Intuit. Dude, Intuit can't even move on this. Wow, Intuit's barely moving on their beat. So, the JP yields are going up. We know that. So, what's going on with the yen? Let's go look. So, oh, I get it. Okay, USD to JPY. Yeah. Okay, so right now, the dollar is strengthening versus the JPY. Okay, this doesn't happen. So this has not happened yet. So we'll go. We are 2 out of 3 on the trifecta from hell. So this is actually Japanese yen getting cheaper in terms of dollars as people fear inflation, right? So they're dumping yen. Risk is Japanese central bank needs stability and forces rates higher. If rates go up, yen surges in value, like end of July 2024. That's the missing piece. So good call for catching me on that. That's the missing piece. It's actually just the setup for the problem. Because see, look at this. If you go out over here to the 1 year, go to 5 year, go to the 5 year, right, where was the Japanese carry trade? See right here, you had this huge run up in all of 2024. Then you had the surprise hike. You get the surprise hike. All of a sudden, the yen dumps, between the carry trade? Yen dumps 8%. Ah, that's interesting. Because the yen strengthens. So the USD's value to the yen dumps 8%. It's always what's so interesting when you have these pair trades. So that's fascinating. So it's really saying this is a way of saying maybe the carry trade is setting up. So I wonder if it's like anticipation of. Is this possibly anticipation of a surge in yen? Keep in mind, the yen goes up in value if Japanese central bank hikes. Yikes. Hikes. USD is strengthening, especially on the jobs issue. It's worse, it's sort of exacerbating this right now, but it's actually cheaper to pay it off right now, to pay off your Japanese debt. So technically, paying off your Japanese debt would be cheaper right now, so may as well sell before the full trifecta. Maybe that's what's happening. Maybe, right? Because look, this is interesting. So it's almost like front-running the carry trade. That's interesting. Thanks, Kevin. I'm retiring soon at 55 next year. After watching one of your vids a few weeks ago, I changed my pension fund from 100% stocks to cash in the market. Happy to sleep. Oh, wow. Well, we want to stay protected. So, minimize that risk out there, especially if you're going into retirement. Nobody ever got hurt taking money off the Vegas table. So I wonder if it's anticipation. That's very interesting. Okay. So Intuit, after its earnings, let's look at its earnings really quickly. Intuit. Right, somebody says Japanese stimulus plan. That's the other issue, is people worry that the stimulus plan is going to create more inflation in Japan, and then that's going to force them to raise rates. At least that's the theory. So it's kind of like, it's not really the Japanese carry trade. It's more like it's fear of the Japanese carry trade. All right, let me look at Intuit really quickly. Intuit. Company news. So, Intuit, EPS, fiscal year EPS. It doesn't look like that good. Hold on a sec. Still sees fiscal year EPS. What's the difference there? 20 cents, 10 cents. 2208. Oh, they actually revised down their fiscal year adjusted EPS by 2 pennies compared to the estimate. Oh. Q2 adjusted EPS misses as well. Wow, their forecast is actually going down. They just beat, but their forecast is going down. Now that's interesting. Yeah. Oh, this might actually end up going down too. Somebody says, Kevin, Japan, Reuters has a great article about Japan. Okay. They have a new premier and she will fight the Japanese yen. They said, well, yes. I know they have, let me see here. Japan, Reuters, yen. Let's see what they say. Scramble to sell Japan sends fiscal warning bells. Investors bailing out of yen and government bonds have driven up borrowing costs to record highs, bending the market out of shape and piling pressure on the policymakers to pivot. Right, because if you pivot, you raise rates, you instantaneously trigger that carry trade again. So it's almost like people are trying to get ahead. Like the Japanese are like, yo, once bitten, twice shy. I'm not going to get caught with my pants down again. I'm going to get ahead of it this time. That makes a lot of psychological sense. We don't know for sure, but it makes a lot of sense. Biggest stimulus package since COVID. Let me know if I'm saying this right. The Takaichi trade. This is the Takaichi trade. Hoya! I love Japan when I went there. I want to be a ninja so badly. Her plans mean more borrowing, caught off guard, no longer enjoys the permanent bid from asset buying, Right, so yields are going up because they're issuing more debt and nobody's buying it. BOJ is falling behind the curve. Uh-oh. A more hawkish position was the only way to stabilize the long bonds. Wow. Yeah, that's exactly what it is. Wow. The selling has prompted concerns for numerous officials, saying the irregular media a strong sense of urgency. Okay. Staunch selling, however, has pushed... here's your yen. Benchmark yield has shot up. Buyer strike, rising yield. You don't have many buyers at the moment. There's your liquidity problem. There's your liquidity problem. People don't have the cash to support the stimulus they're doing. Oh my gosh. Huh. So, because the spread between the yields is still decent. You know, you have what, 0.5% on Japanese debt and 375 or whatever on the FOMC rate. So you still have like a 3%-ish wedge between the two yields for the carry trade to function. It's not as good as it used to be. Please explain in detail what the Bank of Japan has to do with today's stock market crash. I will. Give me a moment to digest it all myself, and then I'll put a summary explanation together. Oh my lord, fat brands. I don't know how they're not fully bankrupt yet, but whatever. Huh. Okay, let's try to put this all together. And I will do my best to explain this because it's kind of insane. Okay? So, in fact, you know what we should do is do a little piece of paper here. And by piece of paper, I mean like a text edit file. We'll make this really quickly, okay? So, if I borrow 100K denominated in yen in Japan to buy US stocks, I'm in margin in Japan owing yen, okay? If yen surges in value 10%, I need to sell 110K dollars to pay my 100K original loan back, right? Okay. Right now, the opposite is happening. So it's actually cheaper to pay back the debt. Last August, this happened and triggered margin calls, rapid unwind. People are very fearful of this happening again. So people are trying to get ahead of it by potentially selling while the yen is weak. Because the opposite is true. You get a discount to do it now. Ah. Yeah. Somebody writes sushi isn't cooked. I don't get it. That's too dumb. All right. Okay. All right, I think we can do this. We can slap this together. We could do it together. We'll do it live. And then we'll talk about the lines tomorrow in the next Alpha Report. All right. So, yeah, let's try to do this. Putting these together on the fly in a way that I don't have to edit this crap later is fun. I just keep talking. That's how we do it. Honestly, it's probably the coffee. Speaking of which, I need to chug a little bit before. Gap Beat. Oh, that's cute.
winning with all income cohorts with equal growth in low, middle, and high incomes. Dixon has seen consistency and strength in our consumer behavior. CFO Katrin O'Connell explained that the tariff impact estimate is unchanged this quarter, and while it did have a 190 basis point hit to gross margin, the stronger sales that Gap had with less discounting offset most of that, leaving gross margin down just 30 basis points from last year. Dixon also acknowledges disappointment with Athleta's performance, but says he believes the new president, who is just 90 days in, is taking the right...
Man, betting on the consumer right now is so tough. I'm actually surprised that Intuit missed on their forecast. I hope they tank. I hope they tank tomorrow and a bunch of institutions stumble, because I would love to buy Intuit. I've sold, I don't know, millions of dollars of stock in the last, 6 weeks maybe? We've sent all the alerts in the Alpha report. And I've bought, 100, 150K or whatever. Not that much, maybe 200K, relative to what I've sold. But I would love, I even bought a little bit of the dip today on some of my favorite, 10-year names. But I'd love to go buy some Intuit. I have not bought. I'll let you know when I buy it, but I would love to buy some Intuit. I think they are, it's a little tough because you're kind of betting on businesses, like small businesses at this point, which is probably a really shitty time to do it. You're probably better off doing that at a recession where after a recession you get business formation again and people opening QuickBooks accounts versus closing them. But, yeah. If there's a soft landing, Intuit's a nice one. Of course, we have to go through what we might not be ready for yet.
You are not prepared.
I chugged the whole thing. Warm, room temperature coffee. I like my coffee room temperature because it matches my IQ. All right, let's get started. Holy smokes, Nvidia stock just tanked from the top of the morning down to where it is today, intraday 9%, which is insane. Massive decline worth probably $500 billion that just evaporated. The NASDAQ 100 went from positive 2% to negative 2.3%, which is a crash of over 4% in the day. AMD couldn't get much over 237 in the pre-market, but look at this. It's at 204 right now in the after hours. This is insane. So what the hell happened? Was Michael Burry right? Well, let me make it very clear in this video. Michael Burry will be right in the future. But I don't think Michael Burry is why markets actually sold off today. I actually think it has a lot more to do with 5 different factors. And we're going to talk about those factors, and then we'll talk about the Burry trade. So, one of those factors is the return or the fear of the Japanese carry trade. We need some dramatic music to go over that. The Japanese carry trade and collapse in financial markets is back, or at least the fear of it is back, with people fearing margin calls in Japan, leading to a crisis in U.S. stocks as people rush to pay off their debt. That was good. I like that. Okay, so now let's actually get into why the market sold off today. Number one, I do think the reveal of what we talked about regarding NVIDIA's documents had one contributor to this. Remember the video where we talked about the increase in finished goods at NVIDIA, the accounts receivable at NVIDIA, the CoreWeave guarantee, the 12% decline in prepaid capacity, all that stuff that they didn't tell us about in the press release or the earnings call that just came out later in the SEC disclosure? I think that's just one leg of this problem. And it's unrelated from the depreciation issue. We'll talk about that with Burry in a moment. That's just one part. I think it's also just one part that the same company that happens to be doing financial statements for OpenAI, you can see right here, Sam Altman, Fontello, Duffield, and Otake, also happens to have been the same exact company right here that did Cisco's 2004 financial statements, which then makes you wonder, why is the same accountant doing OpenAI as Cisco? But let's just call that like a coincidence, okay? Then there's the possibility that we just have institutional seasonal weakness. We'll call that issue number 2. So issue number 1, NVIDIA. Issue number 2, institutional seasonalness. So weak seasonality. CTA selling, right? Institutions needing to sell to raise some cash. You've got a spike in the volatility index, which generally triggers that very selling. You've got liquidity issues, right? These are all real issues that could contribute to this. But what we really want to focus on is this potential Japanese carry trade issue, because something weird is happening in Japan right now that could accelerate people getting nervous, wanting to pay off their debt sooner rather than later. And it's possible that Bitcoin could actually be tracking the very issue in Japan. Now, this is a weird one. Look at this chart right here. If you take Bitcoin and the performance of Bitcoin and you turn it upside down, then you get this orange line right here. Here's Bitcoin upside, sorry, the blue line is Bitcoin. The blue line is Bitcoin upside down. So Bitcoin is tanking. Well, in a weird way, that is aligning perfectly with what's happening to the yield on the Japanese 30-year bond. Okay, well, what the hell does the Japanese 30-year bond, which you could look up that yield, we just type in Japanese 30-year treasury, pull it up. What does this skyrocketing yield have to do with the Japanese carry trade in US stocks? So, to understand this, let's try to set up an example for you, okay? Let's say Donald Trump taco trade is all the rage, and you're in Japan and you're like, you know what? I'm going to go borrow $100,000 USD denominated in yen, so I owe yen, and I'm going to go buy US stocks. Well, that trade does great, obviously, until US stocks start falling, right? Which maybe US stocks start falling because of liquidity issues or weirdness in NVIDIA's financial statements, right? Oh, we just evaporated $500 billion in NVIDIA. That's odd. And so now you're in margin in Japan and everything's good while the market's going up, right? Now, technically, what happened in the last carry trade disaster in last August, what happened was we saw the yen surge in value by 10% because all of a sudden the Japanese central bank hiked rates suddenly. This meant that all of a sudden it became more expensive to pay back your original loan. Now, this is where things get a little bit complicated, okay? So I'm going to try to simplify this. Everybody is shell-shocked about what happened in Japan in last August, okay? Last August, you borrow money, you borrowed that 100 grand, all of a sudden the yen surges and you're like, crap, it's going to cost me a lot of extra money to go back and pay off my debt. And if the market's selling off in the US and I want to get out and I get margin called, I got to sell even more. It creates more Japanese selling pressure in America. But that's actually not what's happening right now, because right now the yen is actually weakening. The yen is falling. The opposite is true. So why would we see, a Japanese carry trade 2.0 fear? Well, because what generally happens is the yen is weakening for a reason. People are worried that the new prime minister in Japan is running too much stimulus in Japan, and she's going to be forced to raise rates and strengthen the yen. So people are actually trying to 4D chess this and sell ahead of the next carry trade. So the Japanese are like, well, may as well get out now at a discount than suffer the next carry trade. This is my opinion, but let me show you some of the facts around this. In a Reuters article talking about the sale of Japanese treasuries, you have, quote, "You just don't have many marginal buyers at the moment." sounds a lot like the liquidity issues you have in America too. Nobody has damn cash. Everybody's too levered up. Too much debt. Okay? Listen to this. I'm calling this, by the way, the new prime minister in Japan. She's a woman. Not that matters, but people call it the Mrs. Takaichi trade. I don't know if I'm saying her name right, but that's what I'm going with. So the Mrs. Takaichi trade, or Prime Minister Takaichi trade. And the idea is that she wants to stimulate. Not only that, she literally just unleashed the largest stimulus package since COVID. Okay, so try to follow this for a moment, okay? You literally have Japan printing money. They're stimulating. So Japan is stimulating. Biggest since COVID, okay? What does stimulus make you fearful of? Stimulus makes people fearful of inflation. So what happens? Yields go up. The market spikes rates for you. So where do we see that evidenced? That's evidenced in the Japanese 30-year bond, which is the yields are skyrocketing on this. Now, the central bank in Japan isn't hiking, but the market is freaking out that they're going to be forced to. So there's fear. That's what this trade is, okay? There's fear right now that the Japanese central bank will be forced to raise rates. If the Japanese central bank is forced to raise rates, then the yen will strengthen, creating the potential carry trade 2.0. Now, that's not happening right now because you could actually get ahead of it right now. So the market says, I don't want that again. I'll pay off my JPY margin now. I'll pay off my margin now because the yen is weak. So I can, get out while people are fearful about liquidity, seasonality, and NVIDIA weird financials, right? There's some weird financial stuff in there. I'm going to take all of that and a downtrend in U.S. markets since, end of October, really. You've had a downtrend in U.S. markets since the end of October. So why not use all of this as an excuse to get ahead of the Japanese carry trade? I'll go pay off my debt in Japan now. How am I going to do that? I'm going to go sell more stocks in America right now. So in other words, because the Japanese, if I put this simply, bottom line, Japanese yields up, people are like, oh crap, shit's about to hit the fan. May as well sell before it does. I'm not going to get caught with my pants down again like last year. And so it's almost like people are FOMO, I don't know if that's the right word, but pre-selling the carry trade, right? So now if the carry trade actually comes, then it's worse because then you end up with what I call a trifecta. So the trifecta for a Japanese carry trade hell is yields up suddenly. That's how the carry trade happened last time. Last time, the central bank in Japan suddenly raised rates in an emergency manner, almost 25 bips. Nobody was expecting it. People were expecting they were going to hold rates at 0 or negative. All of a sudden, they're like, JK, rug pull, 25 bip hike. And people are like, oh, crap. Margin calls, boom, you get 3 weeks of hell. All culminates after people are worried about a recession in the United States where the dollar, now all of a sudden tanks because people think, we're going to cut yields in the United States. So dollar tanks, makes the Japanese carry trade even worse. That's a whole nother aspect. Don't let the dollar falling confuse you with that right now. Okay, we could get so deep on this currency trade, and I'm going to confuse myself if I keep going on this. So the point is, we don't have a carry trade implosion right now. What I think we have is fear that the carry trade could happen again as the central bank in Japan realizes, oh crap, we need to raise rates because otherwise we're going to have an inflation problem. That, I think, is what the markets are pricing in Japan, on top of the fact that you just don't have liquidity. You don't have people sitting around with excess cash to go buy these Japanese bonds. But liquidity issues are the same issues that we have in the United States. We see the liquidity issues in private credit. I mean, don't even get me started on the private credit issues that we have. I'll give you a quick summary just so you can sort of remind yourself of some of these issues, but I think it's actually kind of wild. If I go to the Meet Kevin app and I search for Tricolor, I'll get this breakdown. Look at this crap show. So what do I have right here? On September 10th, which was also the day Charlie Kirk got shot, we have Tricolor gets rug pulled by JP Morgan. JP Morgan freezes an over $700 million warehouse line of credit, and Tricolor goes bust. Now, maybe they deserve to go bust, but they got rug pulled on a line of credit. Tricolor collapses on September 10th. First Brand collapses on September 28th. And there's some really sus things going on with the auditors there and financing regarding the auditors. Maybe it's a canary in the coal mine. That's what the Bank of England says. The Bank of England is laughing at us going, should have kept paying your stamp taxes. Anyway, October 10th, you have the crypto liquidation event, which is also a liquidity event. On November 1st, UBS's 2 private credit funds with exposure to First Brands shutter. On November 3rd, you have BlackRock's Renovo Homes going from November 2nd, everything's fine. All our assets are worth 100 cents on the dollar. To November 3rd, actually, that 100 cents on the dollar is actually worth 0 cents on the dollar. Okay, that happened on November 3rd. That's BlackRock as Renovo Homes shuttered. Then you had on November 4th, the 5-Star Development bankruptcy, which was the Ritz-Carlton developer that went bankrupt after their construction lender rug pulled them on a $30 million loan in Arizona, and then they went bankrupt. And then on November 10th, you had Sonder Homes go bankrupt blaming Marriott, but they were out of cash, bro. I mean, don't even get me started on companies that are out of cash. Like, if you want to know a company that is out of cash and you just want to look at something that looks terrible, like if you want to make yourself feel better with debt, just look at Fat Brands. If you want, like, to study a financial statement that is the worst financial statement I think I've ever seen in my life, go look at Fat Brands. And maybe I'm missing something here, but Fat Brands franchises a bunch of restaurants like Twin Peaks and Hot Dog on a Stick and stuff. We recognize a lot of the brands that they finance. But Fat Brands literally has $2 million of cash. You can see it right here. See? $2 million, September 28th, Fat Brands Inc. in thousands, which makes that $2 million of cash. How much debt do they have due? Right here. Long-term debt, current portion, $1.2 billion. Folks, I don't think I have ever seen a company with $1.2 billion of debt and $2 million of cash. What the hell? But the point of this is if you put all of this together, what you're starting to see is this is a liquidity crash, okay? Japan is shitting bricks because nobody's buying their bonds. So yields are skyrocketing. Bitcoin's selling off because Bitcoin's done nothing for us in the last year, okay? I mean, think about that for a moment. I'm not trying to dump on Bitcoin. I don't own Bitcoin. And I have told everyone in my courses, I will not buy Bitcoin until Michael Burry goes bankrupt. I think the guy's a Ponzi scam. That's it. I think he's a Ponzi. Okay, that's my opinion. I'm not shitting on Bitcoin here. I'm saying I think Michael Saylor needs to go bankrupt and then I'll buy Bitcoin. That's the day I'll buy Bitcoin, is after Michael Saylor goes bankrupt. But the problem is, you look at the 1-year return on Bitcoin right now, you're negative 5.8%. You could have bought house hack bonds, earned 5% yield, positive yield, and all the upside in the stock and the AI and the stuff we're doing in that same time frame. So like the return profile on Bitcoin has sucked over the last year, but so is Ethereum. I mean, look at Ethereum. Tom Lee's down people gave Tom Lee like $10 billion or $13 billion to go buy Ethereum. And he's burned 30% of their money, roughly. Ethereum's down 7% year to date. Tom Lee was shopping at the top. Tom Lee was the top. He was the exit liquidity. Tom Lee was the exit liquidity. Wow, you take a perma bull, give him a fund, promise him some stock comp, and you turn their face into exit liquidity for the institutions who are dumping on you. It's effed up. But now add all of this crap together, okay? People are like, and I'm not, like, I want to be very clear here. People are looking at today's sell-off. They're like, oh my gosh, Michael Burry was right. Michael Burry is making a very long-term argument. I call it the BDT. It's the Burry depreciation trade. We have talked about this Burry depreciation trade for 2 years. And I have always said, it's not an issue now. It will be an issue in the future. It doesn't make sense that chips that are 6 to 8 years old are still running at 100% utilization. The only reason it makes sense is because we have a supply shortage. It's just like, why the hell does it make sense that Kevin got to fly around in a $13 million jet for 3 years and then sold the plane for a profit? Why does that make any sense? The only reason it makes sense is obviously because I'm a genius investor. No! It has to do with the fact that there's a supply shortage of those aircraft. It's the same with the chips. There's a supply shortage. So the value stays artificially high, or even in a weird way case, goes up. Like the plane. It goes up. What? This is crazy. It's a depreciating asset. It should be going down. No. In the future, the value of those planes will tank when supply catches up. In the future, the value of the chips will tank when supply catches up. Has anything changed with depreciation curves today? No.
No. No. No.
This has nothing to do with the Burry depreciation trade. The Burry depreciation trade has everything to do with an issue that comes after the bubble bursts. It has to do with after growth tops off. That's when the Burry depreciation trade is a problem. Now that's actually scary. I wrote that here. That's actually scary because it means the Burry depreciation trade is still ahead of us. He's too early right now, but it means it's still coming. So if the stock market falls off a cliff now, you still get to look forward to the Burry depreciation trade, which is all of a sudden where we're the Mag 7s go, oh crap, we actually gotta say that our depreciation schedule is 2 years or 3 years instead of the 6 or 8 years we chose. Now we're gonna have to write off more expenses. And all of a sudden, EPS tanks at these companies, and then the stocks sell off. That is still to come. That is actually scary if you think about it. It's totally scary. So now, let's try to put it all together. Because, this is crazy. Hopefully, this is not the case. But let's try to put this all together. Take a deep breath. We'll put it all together, because it's crazy. Okay? Put it all together, okay? Liquidity and private credit hell, okay? That's where we stand right now. Then you have institutions selling on VIX. This is CTA selling, okay? Then you have fear of Japanese carry trade coming, getting ahead of it by selling. And then you have NVIDIA weird financials, okay? Then, in the future, the Burry depreciation trade, okay? We still get to look forward to that, right? So that comes later. That's the BDT, not to be confused with buy the dip, BTD, right? But that is actually over here. So what you also have right here, think about this. You have the Fed rug pulling on December rate cut. Probably a big mistake, right? You have this artificial pump in September jobs while we hide October jobs data. This is crazy. So let's try to put it all together. Because I could get excited about this, but how do I consolidate all of this? I put it all together by saying this is, at first and foremost, a liquidity issue. The liquidity issues are driving all of this. Liquidity issues are causing the private, people don't have cash. They're levered to the tits, okay? So giant bottom line. Too much damn debt. Margin all-time high. Leveraged ETFs all-time high. SPVs, special purpose vehicles or acquisition, whatever, all-time highs. Debt way too high. That leads to a lack of debt that you can now get, new debt. So you get liquidity issues, which causes private credit hell, which leads to institutional selling, which causes the stock market to start trickling over, which leads to fear of the Japanese trade coming again, the carry trade coming again, so you're trying to get ahead of it. Then you get weird NVIDIA financials, which I'm like, oh my gosh, this is terrible. This is some weird stuff. Marco Morales just donated $10 to say, made $15,000 with your calls this week. I would donate more, but I have a credit card to pay. Pay off your credit card, man. I appreciate the $10. I appreciate you saying that. Thank you so much. Really appreciate that. Why don't we go ahead and pin your message? Oh, I can't. I can't pin donation. Oh, because they're auto-pinned when you donate. They're auto-pinned. Oh, that's why. Anyway. Then you have this Fed rug pull. You know, what are the odds of a rate cut right now? I'll pull it up. And then, of course, you get this data issue of us not getting... I mean, you know what Kevin Hassett was just saying? Kevin Hassett, he was just saying this on Reuters. Kevin Hassett... Dude, my blood pressure is too high right now. Kevin Hassett... I get so excited about this stuff. I don't know. My fault. I apologize. It says... Kevin Hassett says, oh, the shutdown had a much bigger negative effect than anyone expected. Oh... growth is going to fall because of the shutdown. The September jobs data, though, was a hit out of the park. This is funny. So now you actually have politicians going, everything was fine until the Democrat shutdown. That's the cover. Damn, man. Damn. I don't know. I mean, I could be wrong about some of this stuff, but when I put all of this together, yeah, we have a 34.9% chance of a cut. When I put all of this together, it kind of makes sense. It kind of makes sense. You know, why is this happening?
It's because that's why.
So, you know, I don't know. I mean, I guess if I had to say anything.
Kevin is much more interested than most people, by the way, in the balance sheet.
I think that Kevin's a brilliant guy, and I think that we'd all be very lucky to have him.
The balance sheet's screwed. And if this balance sheet correction continues, then the unfortunate reality is there might not be a lot of places to hide for a while. And this is why I've been such an advocate for raising cash. You know, like, I say it all the time, not because I'm trying to shill HouseHack, although I will say, I'm going through our AI app this morning on HouseHack, and I'm like, oh my God, this is actually really good. Like, I'm looking here, and I could sort by most likely to be a wedge deal. I could pick the zip code. I could pick whatever city I want. I type a city in. Like here, Davie, Florida. 19 options. Click update. And then I get wedge deals in the areas I want. Davie, Florida. Wedge score A. Oh, damn, that's good. So, like, instantaneously picks up a deal that I'm looking at here that's got trash carpet, looks nasty. Some of the bedrooms don't even have flooring. That's great. Cooper City, Florida, blue carpet deal. Oh, that's hot. You know, it's kind of interesting. So pretty impressive. The app, this is getting pretty good. I just put a random zip code in there. That's awesome. So, like, I'm really excited about this, but I don't know, where was I going with this? The reason I brought this up is because, like, we're just like, stay out of debt, no margin. You could buy the dip. Like, don't get me wrong, I bought some of the dip today too, but I also sold over $2 million. I actually probably sold like $2.7 million of stock in the last 6 weeks because I put my money where my mouth is. And then maybe I've bought like 200 grand back. And so I'm reallocating to different positions. But as you can see, I've raised cash. So it's like me personally raising cash, no personal debt, raising cash. HouseHack has cash, focusing on our AI product, focusing on where we can make money. Yeah, we just opened escrow on a 12th deal, but we're not going to go crazy on speculation here because liquidity is a premium right now. If you have cash, you're golden. So it makes sense why people are raising cash. You know? Now I should say it just so I don't get in trouble. If you're interested in investing in HouseHack, just go to househack.com. It's a 5% yield through conversion, and then you get all the upside in the stock. That's the only way the stock converts is if you're up on the stock. You can read about it at househack.com. You get 5%. It's paid on a monthly basis. It's open to non-accredited investors. Read the offering circular, and yeah, we're pretty excited about what we're doing. But as far as this liquidity hell, do I think it's fair to say that Burry was right today? No, I actually think that Burry is early on the depreciation trade. All of these other things to a very basic kind of like Twitter surface title reader user, the title readers drive me nuts. But I think that's why people come to my channel, because we go deep into nuance. I don't think I get as many views because like I don't do surface level stuff. I try to go as deep as possible on things. I love going deep, okay? I got 7 kids. Okay. Anyway, I gotta go. Okay? Burry will be right in the long term. I don't think he's right now. We've got liquidity issues that are causing hell, not just in Japan or in private credit, but here at home. And NVIDIA's funky disclosures were really sus. Somebody here donated $50 to say, check NVIDIA. Are you gonna, is this a reference to Peter Thiel selling? I think it might be. But somebody donated $50 to say, go to NVIDIA, check the sale of securities on October 29th, the SEC filing, scroll down to the last 3 months of sales to see who's selling. Okay. Oh, yeah. It's Jensen. I mean, it's true. I mean, but this is also, in fairness, he gave his 10b5 or 5.1, I don't know what the hell it's called. Yeah, 10b5.1 plan. He did issue that in March. So he has been transparent about that. And in fairness, that sale just ended. Now, maybe it happened to conveniently time the top. Honestly, maybe he did. But yeah, Jensen's been dumping shares. But he's been dumping shares basically since, you know what? Yeah, July. Now, let's see here. Wouldn't that be interesting if that aligned with the top? Because I think the top was like 10 days ago. 210, right? 212. Oh my gosh. Look at that. October 29th was the top, dude. October 29th was the top. And when was his last sale? Oh my God. October 28th. Dude, the guy, the leather jacket is going to go down in infamy. I'm from Europe. Somebody says, I'm from Europe. Can I invest in house? Like, yes. You could be anywhere except Bulgaria or Iran or North Korea. I don't know why Bulgaria is on that list, but you just have to not get caught up by the, what is it called? The OFAC terrorism checks. And I do not know why Bulgaria is part of that. Don't ask me. Ask the SEC. But anyway, that's crazy, dude. Jensen finished selling his stock the day before the frickin' top. Max just picked up 10 house hack convertible bonds. Excited for that. Let's go, Max! Woo! What up, Ma? That's awesome, dude. Thank you so much. And donating here to say that as well. I love you guys. And I'm sorry I get like heated sometimes with this stuff. It's really because I love this stuff. Like, I have a headache right now from screaming. And I need to look at my Aura thing. It's probably off the charts. I'm burning, this is how I burn calories. So I apologize. Daytime stressed. Yeah. Yeah, that's appropriate. It says I'm max stressed. I'd love to show it here. My stress peaked around market close. That's when we started filming this. I think there's only one thing left to say.
You are not prepared.